Ready to tackle a big purchase, fund a vacation, or finally get that business expansion off the ground? The journey to securing a loan, whether personal or business, often feels like a maze, especially when dealing with a specific institution like Patriot Bank. So, what is the real difference in the loan approval process at Patriot Bank when you're applying for a personal loan versus a business loan, and how can you navigate it successfully? Let's break it down, starting with personal loans. For a personal loan, Patriot Bank's approval process centers squarely on you as an individual. The bank is primarily evaluating your personal financial health. This means the key factors are your credit score, a measure of your past borrowing behavior, your debt-to-income ratio, which shows how much of your monthly income goes toward existing debt, and your employment history and income to confirm your ability to repay the new loan. The application is typically straightforward. You'll fill out a form, provide documents like pay stubs and tax returns, and the bank will run a credit check. Because the focus is on a single, clear-cut applicant, the process is usually quicker, often with fast decisions for products like a signature or express signature loan. Now, let's pivot to the business side. A Patriot Bank business loan, whether it's for equipment financing, a line of credit, or an SBA loan, is far more complex because the bank is evaluating two entities, the business and the business owner. The approval process demands a lot more documentation. Patriot Bank will ask for the business's financial statements, think profit and loss statements and balance sheets, to assess its financial performance and cash flow. They'll look at the business plan to understand your objectives and market. Furthermore, they'll often require personal guarantees from the business owner, meaning your personal credit and assets are also on the line. The due diligence is much deeper. They want to see the business's ability to generate revenue to service the debt, not just your personal income. So, the fundamental distinction? A personal loan approval is a streamlined assessment of your individual repayment capacity. A business loan approval is a comprehensive deep dive into the financial viability of the company, backed by the individual's creditworthiness. No matter which path you're on, the best preparation is organization. Have all your documentation ready and be prepared to answer detailed questions about your financial history or your business's future. This attention to detail is what moves your application from the pending pile to approved. With that said, thanks for watching and until next time.